Hey everyone, it's David, and today we're diving into something a little different. If you're into trading or you're curious about the financial markets, you know that not every day can be a winner, and that's exactly what we're talking about today. In this video, I'm going to take you through a recent trading day of mine that didn't go as planned, so let's get into it. So starting every trading day, I look at forexfactory.com to see if there's going to be any news that day. I took this trade on February 6th at 6 p.m., so there was relatively weak news until 8:30 when something a little more important comes up and affects the market. If you don't know about forexfactory.com, it is where I go to check to see if there's any news coming out for that trading day. And if there is, I don't trade because news is random and can cause outliers that can really go against your trade even if your strategy and entry were perfect. But if there isn't, then it's a normal trading day and I'll begin trading. I'll leave a link to it in the description. So now jumping into the trade, I saw that there is a potential uptrend based off the higher lows, so it seemed like a good time to enter when the price gets relatively close to the last higher low. I see the price then get close to the last higher low, and I enter the trade, and this is where I realize I made a mistake, because right after I enter the trade, the price equals the last higher low, which is a good indicator that it has reached its peak and that it will continue to go down from here. Now, what I should have done, which I now realize was a big mistake I made, was I put my stop loss at when this uptrend began, when I should have put my stop loss just 1 or 2 ticks below the last highest low. That way, if it begins to become a downtrend, I would get stopped out. That's where I should have put my stop loss, because I would know that if next low is lower than the last lowest high, then it is a good indicator that the uptrend has reversed and will now become a downtrend or just stay stagnant. And if we speed it up a little bit, as we can see, it does go against me, and at this point I am down $400. And what you're going to see here is it's going to start consolidating and almost just moving back and forth, deciding whether it wants to go higher or lower. It then actually goes high enough where I could have taken a profit of $150, yet this would have made my risk to reward ratio really bad if I exited the trade here. So I decided not to. However, because there's such low volatility, it probably would have been a better decision to just take what the market was giving me rather than hoping for something better, especially since this is a pretty poor entry. The market even gives me another opportunity to exit the trade, but I did not take the opportunity. Then eventually I slowly get stopped out and I get a total loss of $1,099.98. It's not to say that I took a total of 4 trades. The reason it says 4 trades, even though I only took 1 trade, is because I got stopped out 4 times. This happens when the volatility just taps your stop loss and doesn't really go through it. So behind the scenes, what's going on is there's simply just not enough liquidity for your whole trade to get stopped out. So you'll see sometimes it'll just tap your stop loss a few times until you finally get stopped out. This trade was 2 hours and 4 minutes, which is actually the longest trade I've ever had in my life. Usually I'm in and out of a trade 5 to 10 minutes, but this one was very different because the entry was very poor. And there was just a lot of things not going for me this trade. And yeah, I'm going to go over what I did wrong and what I could have done better. My biggest mistake is where I put my stop loss. I should have put my stop loss 1 tick below the previous higher low. This way, if the market decides to go lower than the previous highest low, I could be sure that the uptrend has stopped and now the market is going to decide to do something else. Because I put my stop loss at when the uptrend began, once the market equaled the previous highest low, it turned my trade from a systematic trade that has a good probability of getting me profits to more of a gamble, because now the market has 3 ways it can move. It could either go up, it could either just stagnate, or it could go down. So I really only had a 33% chance of making profits and a 66% chance of not making anything or losing money, which unfortunately we lost money. Another mistake I did was when I had the opportunities to exit the trade with some profits, I should have just taken those opportunities, because there was 1, low liquidity in the market, so I wasn't going to make much anyway because the time that I started trading, and 2, the price at which I entered the trade was not the best. So I should have just taken what the market was offering. Honestly, the market was being very kind to me that day, but I just did not accept its kindness. I should have just taken whatever wins I could have gotten instead of taking the massive loss. That is what trading is all about. It's about going over your mistakes, seeing what you did wrong, and fixing those mistakes on your next trading day until you become profitable. I hope you guys enjoyed the video. I hope you guys gained some value and a new understanding of how a typical trading day goes. And I suggest you guys also make videos. You don't have to post them on YouTube, of course, but also make videos about going over how your trade day went, what you could have done better in the trade, so that over time you can reflect on all the trades you've done and become a better and hopefully a profitable trader. So thank you for watching.